Hi there. Welcome to the closing bell on the 14th of December. Getting pretty close now to Christmas time. We can feel it in the markets, can't we? The volume is drying up. Not that much going on, but we're seeing a bit of weakness out there. PPI figures in the US, so that's the producer price index, which is sort of feeds into the CPI. It's something to keep an eye on, that's for sure. That came in pretty hot, running at about 3% annualized. So we saw bonds selling off. So the 10-year bonds, the yield on those bonds going up. We saw the US dollar flying higher. We're hearing rumors about the yuan that China's thinking about devaluing, with all of this pressure as far as the tariffs when Trump gets in. So we're heading into this January period in, a month of Trump getting in. What's he going to do? What sort of tariffs? There's a lot coming. And I think there might be a bit of nervousness around about that. So I thought I'd just have a quick look at a few of those things for you to set the scene, with the Aussie dollar also sort of looking pretty weak. I've been warning you about that, saying it's probably going to head lower over the next sort of 6 months. So it just creates a framework of how to think about things, some of the investments out there, as I've been saying, the sort of companies with US dollar earnings. Not a bad idea as a bit of a hedge on things, how they're going. Expecting good, strong growth in the US possibly next year with Trump really pumping things, and possibly a bit of a risk on our side of things if China gets hit, and does that sort of hurt us. So you want to sort of have a bit of exposure to some offshore earnings and probably US dollar earnings. So I think that theme is something that we've got going on and can think about and set ourselves up for going into next year. It's something that is sort of, as time goes on, is really starting to show itself. So let's just jump to the charts and have a look at this Roblox tip I gave you just a month ago and see how it's traveling. We'll kick off with there, I think. So let's jump to the charts. So here is that chart of Roblox, and I alerted you to them just a month ago, just for closing bell viewers. I was showing you how it had a terrible time a few years ago and has been stuck in a range. There's the point of control of that range through there. And you note there's the initial range and lots of work done over the last couple of years, many failed attempts to rally. And I said to you, look, it had a good earnings result and was looking ready to start trending. I thought out of the range, and often when something's been stuck in a range for a really long time, and that's going back to 2022. There's been a few years of stuck in this range. When it does break out, it can really trend in quite a strong way. So gave you that tip at around 52 bucks, and just a month later, up around 60 bucks. There's sitting on nearly 15% returns, if you'd been watching Closing Bell. So I do throw things out for you guys because I don't trade US stocks in my service, although I may actually start adding it. I think it's because of what's going on. I think it makes sense. Sort of asking people whether they think that's a good idea. But that's why I just give Closing Bell viewers a heads up when I do see something compelling. So not a bad return for 1 month. It's starting to trend, and the big question is, are we seeing a breakout above this range from the last 2 years? And is it ready to trend back to the upside, back to where it was? And I think that may be the case. So I hope you managed to get on that. If you did, why not write a comment below the video and let me know. I'd like to know if people are actually acting on these tips. I mean, why am I throwing them out there otherwise? Um, So I did just want to quickly start with these US 10-year bonds. I often look at them. I know they can be a bit dull, but worth just having in the back of your mind as we move forward, because it has been a real, I guess, unexpected move over the last few months. We had the yield on these 10-year bonds. This is a 5% yield up there. Here's the yield down at near zero a few years ago. So this was the move based on inflation and rates marching higher over the last few years. So this period in the last year, we've been expecting rates to fall. They've been lowering rates, like they did the first cut in interest rates a few months ago, and yet the 10-year bonds have gone from 3.6% up to the current level around 4.3%. So 10-year bond yields are actually rising. Inflation isn't totally killed, and as I said at the start, the PPI figures came out pretty hot. So now this is the sort of turn up for the books, I guess, and the thought of with Trump getting in, spending but cutting taxes, is their deficits going to be huge? Are they going to have to issue a lot more bonds to cover the gap? So is the rise in yields also based on expected coming flood of supply? Whatever it is, the chart as it's set up here is saying that it really needs the rates to drop pretty substantially and to really create the monthly sell pivot again before you can get bullish on those bonds. Because, of course, the price of bonds, as the rates go up, the price of bonds is actually going down. So this is a bit of a weird chart to get your head around. This is actually showing you the yield. Um, so as it stands, if I'm just totally a technical analyst and didn't know what this market was, I'd be saying that it's ready for rates to actually go higher, which is pretty unexpected. And I've said to you in the past, rates really need to head sort of above 4.8 to 5% to really say, wow, watch out. These rates can head a lot higher. So I'm going to sort of stick to that. I do need to see the rates heading a bit higher than here before I'll, really get bearish on these bonds. But 2 months ago, we did see see the buy pivot there on the monthly, where we've got the bars marching lower every month, rates going down, going down, going down, and then we have a monthly close above the high of that lowest yield. So that is saying, um, you know, uh, basically that's like a major sell signal on those bonds, with the rates heading back up like that. So, that's just the state of it right now is just be saying, well, it is looking like the rates can head higher, which is a surprise. And it is definitely feeding into a strong US dollar. So let's just have a look at that. So this being the US dollar, and the theme post-Trump is that US dollar has been flying higher and is now sort of resting, or testing pretty major resistance around this sort of 108 area. But just big picture is to note that the US dollar is sort of in long-term uptrend now. And look, it's been stuck in a range for a couple of years. So it's been sort of going backwards and forwards on that trend. So, maybe it's going to turn back down again. But if it is going to trend higher, then just going back, um, when it does get going, uh, when that trend turns up, it could, or it needs to be in that state to really trend strongly. And so it is actually in that long-term trend now and testing this resistance. So, what happens if it starts trending through there? All of a sudden, the big picture is just looking like a continuation of this very long-term uptrend. So, uh, you've got to have your mindset that this US dollar, well, it could break out and trend as Trump gets in. Is it sort of preparing itself for a large move? And that's, I guess, the thought. We know that China is thinking about devaluing. What chain of events does that set off? Maybe that's the big issue going into this next few months. So let's have a look at the Aussie dollar. So the last time we looked at this Aussie dollar, obviously I was thinking it was going to break out there, got that one wrong, um, with rates falling in the US and expecting them to stay high in Australia. That got completely reversed, and now that Aussie dollar, I was saying, look, there's a lot of dominoes lined up, so I basically went off that bullish Aussie dollar call, thankfully, back up around 65 cents, and was saying, look, there's a lot of dominoes lined up here because there's going to be plenty of stoppies just below here. And what can happen is those stoppies can then set off the stoppies that are below there, and then you'll have stoppies, a lot of stoppies going off below there. So you can just get a chain reaction um, that can just see quite a sharp move. So that's why I was saying, look, next 3, 6 months, Aussie dollar may be down at 60 cents. How does that affect what you're doing? Do you get, some investments offshore or looking at those companies in Australia with offshore earnings? That should be well supported on the back of a weak Aussie dollar. But, that's getting down into pretty strong support levels down there. But that's just the current um, look is pretty bearish. And I guess, I don't know what's going to happen in China and do things get worse, this trade war, etc., etc. The property market has another leg down. Maybe there's going to be a continuation of this downtrend. I don't know. But for now, it's just looking a bit primed to surprise to the downside on that Aussie dollar. So thinking about stocks, and yes, we are seeing a bit of weakness, but you know, the weakness we're seeing is what from here to here. So it's still near the highs, still in long-term uptrend, all that sort of thing. So we actually need to see more weakness before we can get too concerned. Monthly close below that 10-month exponential would be the first sign. Monthly sell pivot, that sort of thing. So, we're still well before saying, dump a few things, take some profits, etc. But it is just in a zone where I'm, wary, I guess. I've been allowing everything to sort of run, everything's trending, all well and good. But it is just in a zone where I am just going to keep an eye on things, seeing how whether we do get a sell signal from around this area. And I just wanted to show you why, just for interest's sake. I show you these ranges that I tell you about. Say if a market's trending and you have a correction, I'm then looking at that range, as you know, looking at the midpoint of that as like a point of control. That's being like a gravitational point, let's say. It's where most of the trading goes on. And then we'll have these false breaks that occur and an oscillation around that range. So that being the initial range and the midpoint being very important. And if it is going to trend, it usually sort of does something like that. And there's areas outside the range that I've told you about. And particularly, there's an area which is that Fibonacci level, 61.8%, outside that range, which is an area where there's just a higher probability that it will reverse and possibly head back to that point of control. So it's as if it's broken out. You think it's away, and everyone's bullish, and it all looks fantastic when it gets there. But that is sort of a high risk spot where it can still actually be under the gravitational influence of that point of control, that midpoint of the range. So that's what I want to just kick off, thinking about that and just show you examples of that. If we're looking at this is the ASX 200, and there's the crash in '07 and the recovery. So if I'm looking at these corrective moves to the downside, so I'm looking at this correction back in 2011, and then analyzing it based on that and saying this blue line here is that Fibonacci level outside the range. So making the calculation of this distance and then the Fibonacci level above that range. That's just the area where I'm wary, where it can look like it's away, but all of a sudden fool everyone. Everyone's long, all the shorts are taken out, and then corrections can often begin from there. So just moving along and just proving the point. If I'm looking at these corrections, again, you can see big correction there. 2015, that was the devaluation of the yuan actually in August 2015, which caused that big selling there. And then you've got these areas I'm telling you about. The 25% is one, and the 618 is the other. And you can see there on the way up, that hit it pretty perfectly before it had a correction. Then another rally up to uh, when we had the 2020 crash. So that's the area there, and we saw a big correction from there. And just again, just quickly following along, doubling up, even just looking at that correction and thinking about the way that it moved. Big sell-off, and then the rally up to that area, 618 above. That's where that happened. Then we had the crash. Where did it go to? There's the level 618 below. And that's where it then reversed and went back to that point of control. So there's your point of control there. So uh, just thinking then about this last few years trading we've had, and we had this big correction here. So if I'm just looking at that correction and viewing, I'm sure you can see it. There's the correction. There's your point of control. So you can see there lots of oscillation, lots of prices revisiting that point of control. There's your sell zone within the range. You can see there was lots of work done for months and months and months in the ASX around there. And so we've had this rally, and it's just getting to that sort of danger zone where everyone's bullish, people think it's away, and it just can be a spot that can ignite a bit of a correction, even though it is probably heading higher. So, no reason to say that that's it. It's watch out. It's just that this is where corrections can begin from. I'm sure you can see this sort of long-term channel there. Right, that's sort of how the stock market for us, the ASX, has been moving. And, you can see it's also at the top, right at the top of that channel. This is where that correction began from. That's also there. And, all of these major corrections along the way happening from the top of that channel. So that's just saying there's a few things saying, well, this current selling, well, it could evolve into something. So I guess that's the main thing, but it's too early. It's too early to say, that's it. But it's just a point for you to follow and to think about. I'm sure you'd say, well, sure, as if that works, but it actually does. And let's see how it pans out, I guess, as we get through Christmas and see Trumpy get in and start um, changing everything. And we could see some fireworks happening around sort of late January, February, couldn't we? So, all right, I think that's enough for today. I hope you got on to Roblox. It looks pretty good to me. And let me know if you did, and I shall chat to you next week.